Have you ever felt like you have fewer choices? That the prices for your phone bill, your plane ticket, your groceries only ever seem to go up? You might think this is just how the world works, the natural result of a free market. But what if it isn't? What if the choices you have are carefully curated for you? What if the market's invisible hand is being guided by a very visible, very powerful few? This is the quiet reality of our modern economy. A handful of massive corporations now wield immense power. They shape the world we live in, often in ways we never see. They don't just sell us products, they shape the very rules of the game to ensure they always win. This is not a conspiracy theory. It is a playbook. Why should you care if a few big companies control the market for your groceries or your internet service? The answer is simple. It costs you money, it limits your freedom, and it damages the health of our economy. When one or two firms dominate an industry, they face little pressure to compete on price. They know you have nowhere else to go, so they can raise prices on everything, from your monthly prescriptions to your airline tickets, and you are forced to pay. This isn't just a small increase here and there. Over time, it becomes a hidden tax paid to monopoly power. It's why your cable bill creeps up even when service doesn't improve. Beyond the hit to your wallet, consolidation erodes quality and stifles innovation. The most powerful tactic has nothing to do with making a better product. It has everything to do with money and influence. It is called lobbying. Corporations spend billions to shape laws and regulations. They hire well-connected insiders, often former officials, to gain access. These lobbyists don't just ask for favors, they help write the legislation. They draft the fine print, insert clauses, and create loopholes, often at the direct expense of the public and smaller competitors. A pharma giant seeks to extend a blockbuster drug monopoly, preventing cheaper generics from entering. They flood meetings, fund campaigns, and back friendly studies. They run PR about innovation while protecting monopoly profits. A law passes or a rule weakens, patients pay hundreds more. The influence machine becomes a barrier to challengers. While builders build, incumbents rig the rules. The result: weaker antitrust, complex tax breaks, risky deregulation. If lobbying writes the rules, mergers and acquisitions clear the board. Today, giants don't just compete with rivals, they buy them. A ruthless efficiency, swallow potential threats early. When a startup rises, the checkbook opens. It's framed as a success story, a win for founders. But it's one less competitor, one less source of new ideas. Killer acquisitions: buy, discontinue, absorb, dominate. Instagram, neutralized as a rival. WhatsApp, another potential challenger, gone. Market concentration rises across the economy. 4 airlines dominate domestic travel. Prices rise in unison. Less comfort, worse service, few alternatives. The pattern repeats across industries. Regulators focus narrowly on short-term price effects, miss the big picture. We need watchdogs willing to block deals and protect future competition. Tactic 3. The supply chain chokehold, owning the path to the customer. Power isn't just product, it's control of distribution networks and retail channels. Control the pathway, dictate the terms. Favor your own, tax the rest. A few chains dominate grocery. Immense leverage over suppliers. Fees for shelf space keep new brands off the shelf. Store brands copy successes, undercut on price, and win the aisle. Online, gatekeepers compete with their own sellers and see all their data. Accusations of cloning bestsellers to squeeze small sellers. Apple can allow or deny access, set terms, and charge steep commissions. Control the choke point. Choke off rivals. Tolls at every bridge, paid by sellers and consumers. Tactic 4. Predatory pricing. Weaponizing cost. Sell below cost. Bleed rivals dry, then hike prices. Cross-subsidies let giants absorb losses. Locals cannot. Cheap rides conquered markets. Later, surge pricing ruled. In the 21st century, the most valuable resource is data. Your data. Every action generates information refined into power by dominant platforms. Fortresses of data fuel prediction, persuasion, and entrenchment. More users create more data, improving services, attracting more users. A formidable moat locks out would-be challengers. Omniscience at the gate. Who sells, who surges, who trends, then move first. Recommendations aren't neutral. They're engineered to maximize time and spend. Platforms can subtly favor their own services over competitors. A garden with high walls, harder to find the exits. Your data builds the walls of a prison you don't even know you're in. Dominance in search pushed an ecosystem of products and data pipelines. Data powers ads. Self-preferencing accusations follow. Acquisitions cement the moat. Extend exclusivity, delay generics, tweak formulas, profits protected. Many labels, few owners, shelves look diverse, profits flow to the same towers. The problem seems vast, but it's solvable. Weak laws and lax enforcement built this power. Laws can unbuild it, reinvigorate antitrust, block harmful mergers, and protect future competition. Expose the lobbying machine and close the revolving door. Reduce money's grip on politics so leaders serve people, not CEOs. Give people control of data. Make platforms interoperable. Take your friends' purchases and photos to competitors. Break the walls. Stop gatekeepers from stacking results in their favor. Use public tools to seed competition and alternatives. Understanding the playbook is an act of defiance and a spark for change. History shows giants can be reined in when people act. This fight isn't against business, it's for it, so ideas, entrepreneurs, and consumers can all win.